Welcome. My name is Myooran Mahalingam, Global Equities Portfolio Manager from MLC. It's my great pleasure to introduce Barry Dargan, Chief Investment Officer of Intermede Investment Partners here in Sydney. Barry, thank you for joining us all the way from London.
Pleasure.
Barry, perhaps we can start off by you outlining how you manage money at Intermede Investment Partners.
Yes, Intermede was set up about 3 years ago, working with a small team of focused individuals who look at stocks on a long-term fundamental basis. Our approach is to find companies that we think can deliver long-term compounding growth in returns and earnings for many decades to come. Companies that we believe have a sustainable competitive advantage, excellent management and great business models. And that's really what we're looking for in a concentrated portfolio of these best-in-class companies globally. And
Barry, this is an approach which you have been following for multiple decades now.
Indeed, yes. I began managing money in 2001 as a portfolio manager and employed that process and that style, and it's worked well since that time. And prior to that, I was an analyst. Again, using that kind of process, and it delivered good results.
Tried and tested in different geographical locations as well.
Absolutely, yes, in Asia and Europe, and now also in the US, so globally, and in many different market environments over that period. Good times and bad times.
Markets performed very strongly in 2016. How has that impacted your portfolio? And perhaps you can talk about some of the opportunities you're seeing today.
Yeah, so 2016 was a somewhat unusual year in that we had a very sharp reflation rally, which was led by cyclical names and financial stocks that were anticipating higher interest rates. We saw that as very much a one-time re-rating in these names, and towards the end of 2016 they became very expensive relative to the average stock. A little bit like the 99 peak in the tech sector, and we're now starting to see that unwind, which has given us a good tailwind as we go into this year, as some of the companies that are the stocks that were left behind are now starting to perform in a very good way.
And what do you think differentiates Intermede Investment Partners from other global equity managers?
Yes, well, we're very focused on what we do. We just run the one strategy. We employ the one process that has been used for a long time with success. We're a team that's worked together for quite some time. It's an employee majority-owned business, which obviously gives us huge incentive to see the business succeed, but we also have the backing of a major financial institution behind us, which is a minority owner in the business.
And I suppose taking a long-term investment horizon also helps you in terms of formulating the right decisions?
We think so. We think that you can get caught up in all sorts of gossip about the market on a short-term basis and what's going to outperform this quarter or that quarter. That's not what we do. We try to X out that noise, and we're looking for really truly long-term growth names that are going to deliver on a compounding basis over many, many years. And if you take a longer-term basis and own those kind of companies, they're going to come good for you over that period.
Can you talk about a name in the portfolio that particularly excites you?
Yes, so all of our portfolio is high conviction names that we own, and we own a very small number of names, just the best 40 or 50 names that we think exist in the world. But if I had to think about one in particular that comes to mind, I'd say that would be Alibaba. It is the leading internet e-commerce play in China. It has a dominant market share in both the B2C and the B2B space. Market shares in the 60-70% space. It's hugely cash generative because it doesn't take any inventory positions and has very high margins. It's growing at a very rapid pace. China seems to have not developed the retail infrastructure of bricks and mortar style that many other countries have. It's gone straight to e-commerce. So if you want to sell brands into inland cities, tier 2 and 3 cities, you need to do it through an e-commerce platform. And Alibaba is really the only way to do that. They also have like an Amazon Web Service style data platform that they're rolling out to corporates in China. And corporates in China must keep their data in China, so it's the leading play in that space. It's growing very rapidly as well. And it also has the leading e-commerce play in Southeast Asia through its holding in Lazada, which we're now starting to see being built out as well. So we see a multi-year growth opportunity with this company, and we think it's actually not that expensive when you look at it on some measures such as unlevered free cash flow.
And with stocks like Alibaba, they don't go straight up. there are pockets where the stock retraces. And so can you talk me through your response and reaction in those situations where the stock actually sells off?
Well, we actually see those kind of pullbacks as great opportunities to add more to a position that we think we have very fundamental long-term conviction in, but we think the market is missing the point or undervaluing it relative to its intrinsic value. So if we see a pullback in a high-quality name like that, we will definitely add to it.
Barry Dargan, thank you very much indeed for your time.
Thank you very much.